morning, Trinidad and Tobago, and welcome to the Bourse Report. Well, today we're taking a look at the manufacturing sector and earnings results from that particular sector, and we're taking a look at two vice stocks, as they are sometimes called. Of course, we're talking about Angostura Holdings Ltd as well as WITCO. And for that 6-month period, they would have both stocks would have reported contrasting results. Let's take a look at what they would have reported as well as what might be in store for those companies in the months ahead. Turning firstly to Angostura Holdings, for that period ended June 30th, that 6-month period rather, the group would have recorded an earnings per share figure of 27 cents per share, which was a very impressive 35% increase from that 20 cents recorded in the prior comparable period. Now, we see that's a very significant increase. It was more of a recovery given what would have taken place in the first half of fiscal 2020 last year. Revenues were up just around 3.3% from 358 to 370 million. Gross profits up a fairly impressive 5.8% from 166 million to just around 176 odd million. And there was some significant increases in results from operating activities as well, up 17.7%. From 56 to 66 odd million, profit 24 million, and profits attributable to shareholders increased at 36 odd percent from 40 to $55.6 million. It was manifested in a recovery in terms of operating and profit after tax margins. And if we take a look at that pink line in terms of profit after tax margin, we can see that for the 6-month period ended 2021, the PAT margin would have been, or recovered rather, to 15% from that 11.4% it would have dipped to in the first half of 2020. Again, very uncertain operating conditions and closures would have led to a fall off in margins during that particular time of 2020. So margins would have recovered more in line with conventional or recent trending margins at around that 15% level in terms of profit after taxes, and normalized also at the operating and gross profit level in the 47% and 17 to 18% region, respectively. Now, this graph would actually give a better idea in terms of the recovery. We can see that for that 6-month period over the past couple of years, Angostura has been chugging along quite nicely from 21 to 23 to 26 cents. There was that dip to 20 cents in the fiscal 2020 half-year period, recovering nicely in the most recently completed period to 27 cents. So more of a recovery as opposed to significant growth per se, but it's all welcomed by investors nonetheless. At a price of $16.45, Angostura is trading at a price-to-earnings ratio of just over 21 times, which is relatively attractive compared to the sector average of 27.6 times, and offers investors a dividend yield of 2.4%, which is a little bit below the sector average of 3.1%. Now, the company has been pursuing a lot of product innovation, most recently with its launch of its WITCO pineapple brand, as well as the rebranding of its LLB line to Angostura Chill, with some new flavor launches coming. Of course, the orange blood and the king orange, or blood orange and bitters rather, as well as the rebranding of its Sarodh and bitters and LLB. So good things continue to happen for Angostura in terms of their branding and positioning. And we can see that there has also been recovering margins, that revenue resilience, but there is still a lot of economic uncertainty, particularly in the domestic environment and the domestic market, and on that basis we're going to maintain a neutral rating on Angostura Holdings rather, for the time being. With turning to WITCO quickly, the company would have recorded earnings per share of 74 cents, which was a 3.9% decline from the 77 cents recorded in the prior comparable period. Revenues were down just around 2.5% from 420 odd million to 410 million. Gross profits down just around 2.3% as well, from 327 to 319 million. Profits attributable to shareholders down at 3.2% from 193 to 187 million. When we take a look at WITCO's revenue challenges, well, they continue. After a 10.4% decline period on period for the half year for fiscal 2020, that 6-month period, revenues would have declined at a slower pace, but still on a negative trajectory, down 2.4% for that fiscal 2021 6-month period, falling from 421 to 411 odd million. So there is some positive news, perhaps in terms of a slowing trend of revenues, but it continues on that downward trend right now, well, for the time being. We can see that WITCO continues to be very efficient in terms of their operations. Gross profit margins have continued to hover around that 77 the 78% level. Profit after tax margins, however, would have dipped recently in the half year of 2021 down to 45.5% to 46.1%. Again, still better than the the half year 2017 to 2019 period, but again, marginally lower than that half year 2020 period. So the group does continue to mean some good degree of operating efficiency, but it remains a fairly challenging environment in terms of demand nonetheless, and we're hoping that that will be a near-term challenge as more traditional entertainment channels continue to reopen very cautiously, notwithstanding the economic uncertainty that abounds, as well as the recent introduction of the Delta variant into the equation of the pandemic in the Trinidad and Tobago market. So at the price of $32, WITCO is trading at a price earnings ratio of $20, or 20 times rather, again, relatively attractive to the sector average of 27.6 times, and is one of the higher dividend yielding stocks on the Trinidad and Tobago Stock Exchange with a dividend yield of 4.8% compared to the sector average of 3.2%. So again, because of those demand challenges, tempered by the attractive dividends, but overlaid by that economic uncertainty, Bourse is going to maintain a neutral rating on WITCO for the time being. But that's it for this week's edition of the Bourse Report. For more information, of course, you can give us a call at 226-8773, email us at invest@boursefinancial.com, or check out our website at bourseinvestment.com. And of course, you can catch us in today's business section of the Bigger, Better Trinidad and Tobago Guardian. Stay safe, keep vaccinated. See you next week. This has been the Bourse Report.